Hi, everyone. Welcome back. I'm delighted to introduce the next panel here at Quantum Tech. And the moderator for this panel is Roland Fejfar, who is a vice president in Morgan Stanley's investment banking division. He's been advising clients on corporate finance related matters, including private capital raisings, IPOs, equity, debt offerings, and M&A. He also leads the quantum working group at the firm. So obviously has more than a keen interest in quantum technologies. As a side note, I have to acknowledge that without Roland, we wouldn't be here, because quantum tech was his concept originally, and I remember hashing out the details with him 3 years ago in Canary Wharf. So Roland, welcome, and thank you for hosting, and I'll hand the floor over to you.
Thanks a lot, Amit. Slides changed, so my job changed, so I'm leading the technology business development internationally. So it's about bringing new technologies into the firm. So that changed about 2 years ago. But it's still true that I co-lead the quantum tech working group at the firm. And so yes, we're kind of thinking about how we should apply quantum technologies at Morgan Stanley. So definitely very interested in the topic. So also from my end, thanks a lot, everybody, for joining this panel. Very interested to hear from our panelists on the VC side, how they see the market and whether it's a winter coming or we're going to see a new dawn, and what the difference is between all the hype that we're seeing and the reality on the ground. So very pleased to have a distinguished panel of venture capitalists that all have spent a considerable amount of time in the sector. So this session will be split in a few parts. We'll start with introductions. I'll leave it to the panelists to introduce themselves. Then we'll have each of the panelists give a little bit of a state of the quantum union speech, quote unquote, very short, for 2 minutes each. We'll go through some moderated questions and rapid fire, and then leave it open for about 10 minutes for Q&A from the audience. So with that, can I kindly ask the panelists to introduce themselves, give a quick overview of the position and what they've done in the quantum space to date. And if we could start with Maria, Morgan, and then Tom.
Yeah, hi all, I'm Maria Lepskaya, and I'm head of the Quantum Tech and Advanced Materials Investment Focus at Runa Capital and SIT Capital, Runa's partner fund. Runa is an international venture fund launched in 2010 with headquarters in Silicon Valley. Our founding partners are successful serial entrepreneurs who built several global tech companies such as Acronis, Parallels, and Acumatica, with more than $100 million in revenues. Runa invested in 60+ companies across 14 countries. Our sweet piece of cake is Series A, but we invest also at Series B and C. In May 2020, we closed our third fund with $157 million under management and an additional important focus on quantum computing. Regarding quantum startups, in 2013, we invested in ID Quantique from our sister QVF Capital Fund and exited from the company in 2018. From our Runa third fund, last summer, we put our bet on a quantum software company, and now we are closing several more quantum deals in hardware and sensing topics. Happy to participate in this panel discussion. Thank you.
Thanks, Maria. So I'm Morgan Polotan. I work at a firm called B Capital Group. And I joined actually relatively recently. The reason I'm on this panel is probably more to do with my what I did at my last firm, which is Comcast Ventures. While at CV, I helped lead our quantum thesis that culminated in an investment in a quantum software company called Zapata Computing. We led the Series A and doubled down the Series B. And that was about almost 2 years ago now. And so, that we kind of spoke to all the hardware players, all the software players, all the academics, industry folks, and that we could find, kind of developed this thesis around quantum software, and have been trying to stay involved as much as I can in the quantum ecosystem for the past couple of years. And so my other kind of hobby claim to fame is that I believe I may have, along with a couple friends, the largest quantum Telegram group. which is very exciting and really fun. So, you know, if you guys are not on it, I'll definitely send out some invites. But it has about, you know, 30, 40 people, mainly founders and academics. And you know, we talk about all stuff quantum. We have Clubhouse chats on a recurring basis around quantum. So there's definitely a lot of interest in the space, which is really exciting. So I'll hand it over to Tom.
Good morning, everybody. Greetings from Montreal, Canada, where the snow finally melted up here. So I represent BDC Deep Tech Fund, which is a $200 million venture capital fund focused on deep tech, especially in the quantum technology sector. So we look at quantum computers, photonics, sensors, and also at I guess some of the hardware plays. So what's unique about our fund is that we're part of the Business Development Bank of Canada. So we are a Crown Corporation or state-owned enterprise, and BDC Capital is one of the largest VC investors in the country. They're invested in 95 different funds, so most of the market here in Canada, and 150 different types of company. We created the fund to address an important gap in Canada, which is a dearth of investment in these kinds of tough tech plays, despite the fact that Canada is one of the leading centers for quantum research in the world. So in addition to our fund, which is a part of a policy initiative, and so it's a VC fund, we also have an operating model in which we partner with a number of government agencies and with the federal government to kind of support our portfolio companies to kind of access certain procurement programs, policy programs, and other support programs to really support our quantum sector up here. So our fund can only invest in Canadian headquartered startups, but we're a new fund. We just came online just in January. So I'm delighted to be here at Quantum Tech, and thank Amit and Roland for the very kind invitation.
Excellent. Thanks everybody for their introductions and for also staying on time. If I next could kindly ask you to give your kind of, you know, state of the quantum union speech or perspective, and give the audience, you know, given that you're spending so much time, each of you is spending so much time in the sector, and really, you know, understand what's the reality and how it differs from the hype. Where are we? Are we coming? Is a winter coming? Is this a new dawn? Where do you see the kind of quantum nation, so to speak, at this point, and maybe a little bit also your outlook? So if I could ask you for the next 2-3 minutes each to get that perspective would be appreciated. Maybe Tom, if I could start with you.
Yeah, so I think the winter is ending. I'm just the optimist to me in Canada because it's ending here finally. But it's ending. And I think we'll talk a little bit about it, but I think IonQ was a wake-up call for everybody that there's actually quite a significant amount of investment dollars available for quantum technology. So I think there's a number of reasons why. I think one is just in the last few years, there's a tremendous amount of capital availability in the market. Just before the COVID crisis, the entire VC and private equity sector as an asset class had nearly $2 trillion in dry powder walking into the crisis. And with interest rates near zero, there's no doubt there's capital availability is not going to be an issue. And we saw the formation of a lot of mega funds. So funds north of $500, $650 million. So this is a sector that required, we're dealing with technologies that eats up a lot of capital. So I think there's the capital availability. And I think the technology is also at a place where people can actually see the light at the end of the tunnel. That there's certain technologies 10 years ago that people didn't think was possible, such as a photonics-based quantum computer. And so what we're seeing now is that we can actually see, and we saw a recent article by a Canadian startup, Xanadu, that was published in Nature, saying, here's our blueprint to hitting 1 million qubits by 2026, 2028. And I think right now we feel there's a race to getting a generalizable, error-corrected quantum computer. There's still some gaps, and we'll talk a little bit about that. But at this point, I think with the availability of capital, the fact that people can see the technology actually being realizable, and also the fact that there's actually clients lining up, like they hired someone like you, Roland, or you, Morgan, to kind of start testing out this technology. I think it's certainly not a winter.
Great. Thanks a lot for your perspective. Maria.
Yeah. Let me share some interesting statistics on the quantum market. According to our estimations, we can see the following distribution of all quantum startups from pre-seed stage to Series C in subcategories. So for quantum sensors and related advanced materials, they occupy 27% of the market. 23% lies on quantum software and corresponding algorithms. Optical and photonic computing is realized in 11% of quantum market, and the rest, 14%, lies on quantum communication and internet, and 25% is realized by quantum computing and hardware space. The most common stage of product development for quantum startups is a prototype for now. The biggest total funding amount falls on quantum computing and hardware, including optical and photonic players. Also, quantum computing and hardware subcategory include the oldest startups in the market. Second place here corresponds to quantum software and algorithm. The third place goes to sensors. Governments are beginning to put their bet on quantum as well. There are several major national quantum computing programs, such as in China, major national project quantum control, already $1 billion spent in the last 15 years. Now they are increasing funding. In Japan, QLEAP initiative, $200 million for next 10 years, and $250 million spent in the last 15 years. Singapore, $250 million spent already in the past 5 years. Europe, Quantum Flagship Initiative on 1 billion euros for 10 years, and 500 million euros is already spent during the last 20 years. In Australia, about $130 million federal government funding at the state level. USA, National Quantum Initiative, $1.2 billion over 5 years. Canada, $1 billion is already spent. France, 1.8 billion euros for 5 years, plan Quantique and other initiatives. So we can see that not only these ventures, but also government sector is betting on quantum as well. Thanks.
Great, thanks for that overview. I think that's a great perspective. And then Morgan, curious to hear your perspective.
Yeah, so I don't want to be a party pooper, but I am a little bit worried, to be honest. I hope, Tom, that you're right about capital availability. And I certainly agree with the amount of dry powder going into COVID in the low interest rate environment. I think that may be, I'm hoping, the savior. But what I worry about is that, at least on the VC side, every major kind of VC fund that has any interest in deep tech or history investing in deep tech, as far as I can tell, has pretty much made their one quantum bet. And, you know, I think that it's very unlikely for a fund to make a second quantum bet before that one quantum bet has played out, positive or negative. There are a few exceptions to this rule where, you know, the firms are exclusively focused on deep tech, or even like Runa, very focused on quantum. But, you know, if you take a look at, you know, your Sequoias, your NEAs, you know, Comcast Ventures, like we all made kind of one quantum bet, and then we're kind of like waiting and seeing, right? What's going to happen? You know, what is the exit opportunity going to be like? Are we going to hit commercialization in a time frame that works for, you know, venture returns? And so the thing that I worry about is that when you have all these firms making their one quantum bet, and then you have a very capital intensive, especially on the hardware side, capital intensive nature of the company, you know, when you go out to raise that second big round, the pool of investors that you have, like when a founder puts their spreadsheet together, right? Like, here's all the investors I'm going to go talk to for my round. Like, that pool, I think, has shrunk pretty significantly. Right? If you rewind 3 years ago, before any of the firms had made their quantum bet, you had pretty much every VC firm on that list, right? Today, you have, I think most of the VC firms are not going to be candidate investors. And now you're moving into other pools of capital, whether it's sovereign wealth, you know, or, you know, government affiliated entities who are, you know, interested in quantum, which is great. And I'm very encouraged by that. but there does seem to be this kind of shrinking pool of capital racing against commercial milestones. And if those two things don't line up positively, I worry that there will be a handful of really good startups that will need to raise, pretty big rounds, 50, 100+ million dollars. And if they're still, let's say, 2 years away from commercial milestones, that, some of them may falter, right? Now, their SPACs are kind of this interesting side opportunity that maybe there's a new pool of retail capital and public capital that can support companies. But the kind of closing kind of comment I'll have is that, back in 2019, when we invested in Zapata, we tried to triangulate through a lot of conversations a rough year range for when we're going to have a commercial quantum computer. And we kind of settled on this 2023, maybe 2024 timeframe based on a lot of different people giving their predictions. And we still have 2 to 3 years till we hit that. So maybe we will hit that. But now when I talk to people, I start hearing 2026, 28, 2030 for when we're going to have commercial quantum computers. And Tom, you mentioned like that kind of time frame for 1 million qubits, which 1 million physical qubits, which people kind of specify as like when we might have commercial usefulness. So it seems like that the goalpost has moved by several years. So now we may have to bridge some of these companies for the next 6 years with pretty big rounds. And I think, hopefully we'll have new pools of capital other than the kind of traditional VC funds, because I think they're getting close to being tapped out.
Great, thanks for that perspective. Certainly very interesting to have, a little bit of a counterpoint. Tom, do you want to kind of respond to like the capital availability points that Morgan raised?
Yeah. So well, first of all, I don't want to forecast the future, right? This is just my gut feeling. So I'm passionate about my opinion, but I reserve the right to change as the data comes in. I just think I agree on the point that deep tech has not been a traditionally, doesn't fit in the traditional VC profile, right? Because holding periods exceed 7, 8, it's often like 13 years, right? So the holding periods can be quite long. Even our fund was specifically designed to be 12 years plus 2 plus 2. So our team is actually skews quite young because we're going to have to, we have to be there when the carry gets paid out. But I would disagree on that in the sense that I think we're going to see quite a large number of rounds. Let's separate the two. There's quantum computing and then there's quantum tech, right? The quantum sensors, the photonics, and such. This is commercializable and there's actually a lot of applications. And so we're going to see. I'm quite confident. I feel optimistic that we'll see the investments here. It's true. The quantum computing, it's a tough market. I think with IonQ. And I know people talk about what happened with Rigetti and the down round that happened. So people were getting skittish, but when you have IonQ raising north of 600 million just off a SPAC, right? It's shortly after what happened with Rigetti. I remain optimistic because there is a lot of capital right now in VC globally, and it's looking for somewhere to park.
Okay, thanks. That's the statement. So Morgan, you alluded to that a little bit. The kind of there's been now over the last 6-9 months various hardware manufacturers that have put out certain roadmaps. Some of them have a 3-year timeline to commercially viable quantum machines. Some of them have a little bit longer. But let's say on the most optimistic part, the 3 to 4 year time window. What's your view? How realistic is that?
Yeah, I mean, look, I don't have the scientific expertise to judge, how realistic it is. I mean, I hope it's hit. But I think as an investor, I'm always taking a very kind of, when I think about downside protection, I'm always trying to take a more conservative timeline. I think we're all bought into the upside. Like if we get useful commercial quantum computers, and by the way, I've been mainly focused on the computing side, less on the sensing side, although that's a very interesting technology as well. So I think we're all bought in on the upside. I think the main thing to underwrite is the downside protection, the risk, and the timing. And so, it was encouraging to see, IBM put out their roadmap. Privately, we've seen startups during their fundraisers put out a roadmap that is around 3 to 4 years as well. I think that there's a big difference between a corporation like IBM putting out a roadmap and a startup, because frankly, if IBM misses their roadmap, it's fine, right? They have, IBM, Google, like Amazon, these companies, they can spend $1 billion over 10 years and take as long as it takes to build, a quantum computer. And they can even, pivot from their roadmap and buy a startup who has a different, architecture. So like I anticipate like Microsoft with their, they're taking this like Hail Mary bet on Majorana particles and topological computing. And if it doesn't work out, they can always buy, a startup to pivot into a different architecture. So I think if you're talking about the corporation side, whether they hit the roadmap or not, it's not a big deal. On the venture side, it's like it's pretty scary, right? If you put out a roadmap that says you're going to build a quantum computer that's useful in 3 years, and you're going to raise a certain amount today to do it, and then you've put in the minds of every investor this milestone for your next round, and then in 1.5 to 2 years, you're saying, actually, we need more money and more time, right? Like that's not a great look. I mean, this kind of speaks to the engineering risk involved here. Having not hitting plan, right, in venture is always a risk. And it even if you're outside of deep tech, if you don't hit your revenue plan or what have you, it can affect the momentum of your company and the evaluation and everything. And you mentioned Rigetti's down round, right? So I think that's one of the risk here is that, from a founder's perspective, if you don't deliver on that aggressive timeline, you could be facing, terms on your next round that aren't as hard as great, more dilution. And then as an investor, the underwriting case that you've put forth may sour your colleagues, your partners and your investment committee to wanting to invest more in the space, whether to support an existing company or do a new deal. So, I think the main the main advice that I've always give founders is like, the goal is to stay alive, right? Like I think that's if you can stay alive long enough to get over the commercial milestone hump, then things will be rosy, right? What you don't want to do is overraise, overpromise, burn too fast, and not get past that hump. And it'd be tragic if you miss it by a year or two, and you just kind of run out of fuel before then. And so I'm kind of a little bit more wary about like the big rounds and high burn strategy in quantum, just because there's so much timing risk. But yeah, those are my thoughts.
Okay, thank you. So we always talk a lot about, I would say probably 80% of the discussion or even more, 90% of the discussions are always around hardware, aka the chips. And then maybe there's some discussion also around, algorithms, but that's maybe, I don't know, 15%. Tom, obviously to make quantum successful, it needs much more than that, right? It needs a proper ecosystem. Where do you think are the kind of, even from an investor perspective, hidden gems, or what do you think, like from an ecosystem perspective, are the gaps to kind of realize, the quantum space in the next, let's say, 5 years?
Yeah, great question, Roland. Thank you for that. So I would say there's two things that needs to be developed. I think one, we need some actual use cases, which is tricky, right? We're in the NISC era right now. So, but we need some actual use cases. And I think in the financial services industry, they're probably the most ahead. And some optimization optimization work. I know some Japanese and European conglomerates are working with D-Wave, which is one of our investee companies here in Canada. But we do need use cases to justify the investments, because quantum computing won't replace high performance computing anytime soon. It'll just focus on certain problems. So I think we need the use cases. The second thing is that we'll need as a developer community. We'll actually need a group of people that actually understand how to use these computers without getting a PhD in quantum physics. So I think what's great to see is that AWS has partnered with Xanadu, for example, which is a Canadian startup here, and they use a software called Penny Lane, which is a Python-based interface which allows people to run programs. And they ran a recent hackathon called QHack, which was quite successful. So, those are two things: use cases, and I know people say this, and I know one startup in Silicon Valley, QCware, they seem to be doing great work on that. And then this emerging developer base, because people still won't know how to use the machines yet.
Okay, great. Thanks a lot for that. Maria, you've already given us some statistics in your introduction around pools of capital and allocation of capital, but I would be interesting to hear, like, how do you see kind of from the pipeline you're looking at and from the investment opportunities you're researching, how do you see on one side kind of the distribution of opportunities across the broad regions of the US, Europe, and Asia? And also, what's your outlook around the kind of investment flows over this year and the next year?
Yeah, Roland, thank you. There are currently about 250 quantum startups all over the world that have already come from a stealth mode. They are at pre-seed, seed, pre-A, Series A, B, C stages now. The distribution of startups by region shows that 40% of them are in North America, 30% in Europe, continental Europe, 13% in the UK, 70% in other regions such as China, Chile, Japan, Singapore, Israel, Australia, and some others. Total venture capital amount invested in quantum startups is more than $1.5 billion in North America, so mainly in US market and Canada market, and 300 million euros in Europe and UK markets. However, not all of the existing players in the global quantum arena are actively involved in fundraising. This is mainly due to a rather good availability of grant funding from universities and government programs. So quantum spin-offs are often staying in stealth mode for a long time in their labs. There are about 400 laboratories which are developing quantum tech, and on average, 1 or 2 spin-offs could go out from each lab. So we can assume how many quantum startups we might be able to observe in several years when these research groups will come out of their labs. Regarding question about quantum startups outlook in 2020 and 2021, so let us look at examples of different technology type of hardware players which successfully fundraised last year. So we have already discussed Untrapped technology and NQ, which is going to become a public company. Besides NQ and Untrapped computing, we can see such startups as Universal Quantum, Oxford Ionics, that have also raised some capital via seed and pre-seed rounds. In photonics, we can see, of course, Psi-Quantum, which was funded by $215 million. Also, we can see more early-stage startups as Orca, QX, and of course, Xanadu. And cold atom systems such as Cold Quantum, which raised $32 million in 2020. Superconducting players as IQM, which raised $39 million last year. Silicon computing is presented by Quantum Motion, which raised £8 million. Optical computing such as Light Intelligence raised $26 million from China capital guys. And for example, as in software space, we can see Zapata, which raised $40 million plus in 2020, and quantum control systems such as quantum machines. Regarding 2021 outlook, has already presented quantum software and control stack deals with Riverlane with $20+ million via seed round, Qblocks and Qlab, quantum communication company Quantum Exchange, and with some other players. And we suppose we will see more deals with quantum software players, including chemistry and molecular drug design applications, quantum sensing, including blood biomarkers detection applications, quantum communication and internet, optical and phantomic computing, and more deals in quantum hardware space related to untrapped, cold atom, superconducting, and silicon technologies.
Excellent. Thanks a lot for that overview. Certainly a lot of deal activity over the past year, but also quite a strong pipeline in terms of the outlook for this year. So before we get to the last moderated question, I would like to encourage the audience to put questions in. We have around 10 minutes to answer your questions, so feel free to kind of type them in the chat box. So last question, maybe certainly I wouldn't call it elephant in the room, but certainly we already touched upon it a few times, the IonQ SPAC. So is it a milestone? Has it changed the trajectory for the sector? Is it a one-off? What's your perspective? Maybe Tom, if I can start with you.
Yeah, so that was quite a headline maker. I would say just very quickly, I think it's a signal of where things are going to come. So I think it's two things. So it's interesting is that all of a sudden, not only us funds have to compete with each other for like the hot deals, now we have to compete with the retail market as well too, because they can mobilize the retail market, which is not going to help with valuations, right? I don't know if there might be another SPAC. I think it's a signal that that valuations remain quite high. I think that's the signal is, and that people are taking the technology even more seriously because they do see a light at the tunnel. Granted, Morgan's right. It just keeps the goalpost keeps pushing, but I think people are now seeing it's going to be more realistic, and the market's now starting to get much more comfortable with the technology now and to invest in it.
Great, thanks. Maria, what's your perspective?
Yeah. Roland, could you please ask question again?
Sure. It's about the IonQ SPAC. Is it, from your perspective, is it a milestone? Has it changed the trajectory for the sector, or is it just a one-off?
Yeah, I think that, frankly speaking, we will see this when it will become real, on the one hand. On the other hand, I think that now we can't some kind of predict what will be the next step from this milestone. But for sure, it is very interesting, and I think we will see maybe some similar milestones in several next years.
Okay. And then maybe Morgan, there's also a question by the audience around pros and cons. So maybe if you could weave that into your perspective would be appreciated.
Yeah, definitely. So I was very excited about the SPAC news. In general, I support as many possible funding sources for founders. It increases optionality, and that's great. And I think that there's no reason why informed retail investors and public market investors and institutions, should be able to get some exposure to quantum as well. And I think I saw the SPAC deck, and it looks like IonQ is going to have plenty of runway to hit that. Even if the goalpost is moved on commercial utility, like they have the runway to hit it. So going back to my point about downside protection and staying alive, I think it was a great move by IonQ. And the nice thing, going back to also my previous point about, VC funds making their one bet and waiting and seeing is, if it did, the investors that backed IonQ will get an exit. They will get liquidity and distributions. And that's key to making follow-on investments into new companies and providing a proof point that there are exit scenarios that can be had in the space even before you hit commercial utility. So that's all really good. I think it is also a milestone in the sense that, you'll probably have a lot of other quantum companies starting to talk to bankers. And I know this is happening. And so, this is, I think, encouraging too. I think the risk, again, not to be a bear about it, but SPACs themselves, I think there's an open question about how sustainable of a funding vehicle they will be. the big advantage, in kind of addressing the audience question, one of the biggest advantages of a SPAC is that you can put forth financial projections, right, as part of your exit event, right? So a SPAC is essentially a merger with a public company. And so as part of a merger, you typically, say, okay, here's what our pro forma financials will look like over the next few years. Whereas in an IPO, there's too much kind of legal liability to project financials. And so you tend to work more on historical financials and public comps to value the company. So for deep tech startups like Quantum, who don't really have public trading comps and don't have historical financials, SPACs can be an interesting way to tell your story to investors by talking about the future. And I think that's not only relevant for Quantum, but other deep tech startups. And I think that's also great. That being said, there's some weird incentives with SPACs that I think adds some systemic risk to the asset class, which is, when a SPAC sponsor takes their shell corporation public, they typically have 18 to 24 months to acquire a target, or else they either have to give the money back to the investors in the SPAC, or they have to have a shareholder vote to extend the runway. And so you have, in this interest rate environment, you have a lot of capital seeking returns in tech, and you had a lot of SPACs raised, and they all have this kind of clock that's ticking for, where the SPAC sponsors, if they don't acquire a company and they have to return the capital, they will lose money, right? Because they're funding the OpEx of the SPAC in the meantime. And so my worry is that as a vintage, in 2020 and 2021, SPACs as an asset class may underperform. And if that happens, SPACs, historically have not had a great reputation. They've always kind of underperformed because they've always been kind of the, maybe for companies who are not high quality enough to IPO, maybe you SPAC. And so they're starting off with kind of a not a great reputation. They're coming into their own, but if they underperform again because of these incentives, then I think they could actually get relegated back to, like not a preferred way to go public, in which case that funding pool may disappear for deep tech companies, which, I would hate to see happen. And so I think, you just have to be, again, as a founder or as an investor, it's definitely worth taking a look at SPACs. You have to compare it against your alternatives, which for most quantum companies, I would say is not an IPO, but a private funding round. And so, that's, I think, where SPACs can be really interesting, is, if you have to go raise a Series D, like a $400 million Series D, or get acquired via SPAC for the same amount, that's a choice that, you should be taking seriously.
Okay, thanks for that comprehensive perspective. Another question from the audience, and actually one of the questions I had almost similar in my list, is around startups, and so I'll expand it a little bit. So startups and large tech companies. Obviously, large tech companies are investing significant amounts into developing their quantum systems, but at the same time, there's an vibrant startup ecosystem, at least for now, as well. So, and maybe Tom, I'll ask you first. Do you see kind of the larger players buying some of the smaller players? And as a matter of fact, do you see actually even that there's space for startups, particularly on the hardware side, given all the challenges we've talked about, or is it really a play for the big players?
That's a great question, Roland. So what I would say is this: people keep talking about like this space as a moonshot. So let's think about what a moonshot means. It means you come up with a plan and a design, and then you spend a really long time trying to build something based on the initial design. And so I think the question is, if the big tech companies were starting today rather than a number of years ago, what kind of, would they be using the same architectures today? How would they deal with the scaling issues, especially with trapped ions or superconducting qubits? They will probably have a different architecture. And I see that's why there's space for startups. People really looking at like companies like Xanadu and PsiQuantum right now, because they're using a technology that 10 years ago people didn't think was feasible at all. I'm looking at a startup here in Canada that has a potential answer to the about linking up trapped ion chips together, which is addresses a key scalability issues. So yes, there's definitely space for innovation as the science is now accelerating. And I would say also that there's a very good chance about acquisitions. That just because a big tech is working on something doesn't mean that they'll get it right. And we've seen that with some of the big tech companies where they have to retract papers, or they're hitting hiccups. Like we saw that with self-driving cars. It may just be, I think self-driving cars is probably a good analogy. A number of big tech started with their self-driving cars and such, and now we're seeing people like Tesla and other kind of startups still like coming onto market.
Great, and maybe Morgan, given that you have always a critical perspective, curious to hear your view. I think we're running out of time, so maybe if you could kind of keep it to 1 minute.
Yeah, I actually agree with Tom here. So won't be any argument. I think when we invested in Zapata and look at quantum in general, I mean, I think that the main exit scenario we were underwriting was an acquisition by an incumbent. I think AVs are a very apt analogy. Where you have a limited number of high quality startup teams working on technology that the incumbent automakers would not be able to replicate, or either at all or at a much more expensive price, and it's much more cost effective to acquire, so that you have a hedge against the future and make sure you have a place in the autonomous vehicle space. And I think the same thing with quantum, right? You have all the incumbents who have adopted, to Tom's point, at the time, the leading technology. And if that doesn't get them to where they want to be, I think they will absolutely need to acquire, because it's a competitive dynamic, right? If Google can't afford to let Amazon or Microsoft or IBM or Honeywell take the lead in quantum, and vice versa. And so if one company makes an acquisition or is nearing commercial milestones, then the rest of those incumbent tech companies are going to have to either fall behind or catch up. And that's where acquisition becomes really interesting. And we've seen billion-dollar deep tech acquisitions in the space. I mean, not in the quantum space yet, but on AVs and in AI and that kind of thing. So I think that's probably still the most likely outcome for successful quantum startups. And I think it's that's again, as a founder, like that's one of the things that you should be. They say companies are bought, not sold, right? So you should always be forming those relationships with potential acquirers before you ever think about selling your company.
Okay, great. I don't know, Maria, any final perspective from your point of view around the relationship between the large tech companies and startups?
Yeah, I think that, for example, when some large tech company has some internal tech development inside, and usually it corresponds to maybe its own big background of technology developed. So as we can see, for example, in Google, in this case, of course, it could be interesting for such big players to, for example, acquire or partner with startups related to this, to their quantum subcategories. But in other case, I think we will see more maybe different types of collaboration next years when these tech companies, big tech companies and corporates will use another type or try to use another type of technologies inside, which they are not familiar with, maybe.
Okay, excellent. So with that, we're out of time. So really appreciate all the insightful perspectives and views from the panel, as well as for the great questions from the audience. And well, yeah, enjoy the rest of the conference. Thanks a lot. Bye-bye.
Thanks for having me. Bye.